Good morning, everybody. My name is Hwang Saksong. Born, raised, educated in Stockholm, Sweden, but I'm Korean. I'm very Korean. My grandmother taught me how to make kimchi, mandu, and there were no gochujang and doenjang in Sweden. So I'm among the few Koreans, I think, in Europe who knows how to make it by hand. And I would like to welcome the panels. So let's start with Alexander Tkachenko, the founder of VNX and CEO. Mr. Yoon Kwan. Here he comes, the founding partner and CIO of BRV Capital Management. And then we have Michael Jackson, board member, AXA and Volvo, and also former colleague of mine. Mr. Chris Hwang, president of the Yozma group. And Mr. Nitan Pathak, EAF. We're going to start with a short introduction, and I suggest you present yourself, so let's start with Alexander Tkachenko.
Hello, my name is Alexander Tkachenko. I'm an entrepreneur. I started 5 different businesses. Before VNX, I was running a small early-stage VC fund, and there was an issue of liquidity for the LPs in our fund. One of our portfolio companies developed a blockchain solution for the electronic tickets, and I felt that something like this could actually work and solve the issues for the liquidity for our LPs. Ordered the platform to be built first for our own fund. Some of our partners, such as Startup Bootcamp, as well as some of our venture capital partners, decided that it's quite interesting and asked to develop it further for the industry. And for the last year, I've been doing this. Thank you.
Good morning. My name is Kuan Yew. I'm the founding partner of BRV Capital Management, formerly known as Blue Run Ventures. So we were founded back in 1998, Silicon Valley, backed by Nokia Corp. Back then, we had about 40% global market share in the phone space. And over time, we expanded our investment practice out of Silicon Valley to China, Korea, Japan, Europe, and Israel. And one of the iconic investments that we led from the seed stage is PayPal. Now it's about $100 online payment company. We seeded and led Series A to B to C to D, and eventually ended up selling it to eBay. And after that, personally, we led investment into Ace, now part of Google. And so I'm pretty sure when you travel around in Europe, you have probably experience using Ace as the mapping solution for your travel guide. And over time, in China and Korea, we made a ton of investments in the IT space and consumer and retail. And recently, China, we backed several companies when New York Stock Exchange, including Chufenchi, Mogujie, and Ganjiwang, and 58.com, which all became $3 to $8 billion, $10 billion kind of market cap companies from seed stage only a few years ago. So in Korea, we are very interested in applying our technology investment experience, globalized Korean entities, potentially Luxembourg plus European countries, through our network and the channel that we today last 20 years. And very excited about sharing this panel session with the audience, and also thanks to the organization led by VNX. Thank you.
Good morning. My name is Michael Jackson. I spent a long time in the telecommunications industry, always doing challenger phone companies. And when we saw the internet come along, we saw there was a way for people to speak to each other, to communicate with each other using the internet directly and not using the telephone companies, the old-style phone companies. And so we built the Skype, which is one of the first voice-based, video-based communications platforms. And we did it because it helped people speak to each other. That's why we did it, why we spent our time on it. We were fortunate. The company was sold also to eBay, who seemed to be very generous in this panel. And that was great for them, and it was good for us. It allowed us to go on. And then I saw what to do next after that. Well, venture capital was an interesting thing for me. It seemed to be a very easy way to make a lot of money. Everybody was talking about these $1 billion and everything. I found out it wasn't quite so easy as all that, but we shall see. I spent 10 years in venture capital and recently became very, very interested in blockchain space, in crypto space. I was joining the blockchain.com 40 million wallets we have today, rather large global market share, doing exactly the same thing. What blockchain.com does, it's a non-custodial wallet. It means you look after your own money. It's like the money in your pocket. The wallet of blockchain.com is like the wallet in your pocket, made by Louis Vuitton or something. We look after it for you. But we don't decide what to do with your money. You can decide what to do with your money. We don't keep your money. If we go bankrupt, you keep your money, just like if the people who made the wallet in your pocket went bankrupt. And I think this democratization of finance, this democratization of the system is going to go the same way as we did with communication. We can all speak to each other every day with the communication, talk to each other with the WhatsApp, all of these things, with no cost. And it's going to be the same in the financial world. And I think looking at the equity side, looking at the participation in companies, this democratization I think we're going to talk more about later, but it's an area which interests me, and I think it's a long play, but it's the future. So thank you.
I guess it's my turn now. My name is Hwang. I'm the president of the Yozma group. We're the first Israeli venture capital since 1993. So we actually opened up our presence here in Korea back in year 2015. So far, we've been actually accelerating over 370 companies. And since last year in March, we've been investing about $50 million in the US. And then throughout this year, we're trying to actually expand more. And recently, we opened up the Yozma China in Shanghai, and also the Liang in Jiangsu province. Also, we have a presence in Singapore, Tokyo, Japan, and Hong Kong as well. So what we are trying to do is bring in a lot of tech company out from Korea to Asia market. This is our the strategy plans, because it's many of you probably knows the driver Kim Ki-sa actually sold it to the Kakao Talk. I mean the Kakao for like $52 million in the US. So the same company in the Israel called the Waze actually sold it to the Google for close to $1 billion. So what we are trying to do is a lot of Korean companies actually focusing on the local market. So what we are trying to do is connecting entity to entity, country to country, building a bridge between the investment and etc. And a lot of companies is looking for three major things, I guess. That's firstly is capital, and then secondly network, and then number three is manpower. So three of these things we're trying to support throughout the network in the Asia market. Thank you. So lastly, the people that wants to actually talk to me after this conference is more than welcome to, and we can exchange the name cards and so on. Thank you.
Yeah, good morning, everybody. My name is Nitan. I'm working at the European Investment Fund, and I'm very happy to be here today and be able to share the panel with the distinguished guest. I think from our perspective at the European Investment Fund, we are a fund of funds based in Luxembourg and mainly operating in investing into venture capital and private equity fund as a limited partner, as an investor. And recently we have seen an increased trend in investing into funds through fund-of-fund players. And this is the role that we are playing in Europe by being one of the largest investor in this asset class. Today, why we are in Korea is to explore partnership opportunities with asset manager, local Korean asset managers, and trying to look a bit beyond, Europe in terms of investments. So currently, our mandate, being part of the European Commission and the European Investment Bank, does not allow us to invest outside of the EU. but we like to kind of promote cross-border investments by inviting Korean investors to have a look at the European market and push GPs to also consider Korea as a market where small and medium enterprise they invest into could eventually expand. And shortly, I think the reflection and the reason why we were keen to participate to this panel is we're seeing in terms of trend, a major push with respect to data. So the industry is submerged with data, and I think we are kind of trying to organize ourselves to capitalize on the data that is being made available through transactions. And I think this is a very good panel where we can explore together a way to optimize liquidity through data platforms and contribute, whether it's EIF or other people in the ecosystem to the success of the ecosystem looking forward.
Okay, thank you, panel members. A great introduction. As we can hear and see, we have enough competence to pull it off and make an interesting discussion. So we're going to go straight to the point. Alternative investments, also known as exclusive assets. What needs to be done, and what are the requirements? And is it possible to make it mainstream? I will kick it off by handing it over to Alexander to start with, and we're going to have an interactive discussion.
Exclusive assets. Number one point why I think these investments are exclusive is the length of the investment. When you're committing to a venture capital fund, you're really in for 10 to 12 years, and from the mainstream investments, not too many people can afford, number one, ticket size, and number two, the length to which the investments are deployed. That's actually, I saw firsthand even in our fund, when the LPs after 4 to 5 years became quite restless. The fund was performing quite well, so when they saw 4-5x potential return, it's not real, but on paper, many people thought that if there is a possibility to exit, that they would do. Again, it was a small fund, and we didn't have any institutional investors. But to make it mainstream, I think there is a number of reasons and things that need to happen to make it mainstream. Number one, mainstream is a general trend, which is going in different industries. Take Airbnb, Uber, you always see the word of democratization. Starting from lending club to the factoring platforms, you always see also the word of democratization going into the finance. So overall, it is within the trend. However, venture capital and private equity is quite a complex investment. Therefore, to make it mainstream, you really need to see that it is a little bit, how shall I say, becomes more understandable and readable to the kind of sophisticated investors, if it's possible at all. And number two is that it becomes at least liquid, because most of the mainstream investors cannot tolerate a very, very long investment horizons.
Okay. Thank you, Alexander. So, Mr. Yoon, Kwan, what's your view on this one?
I think Alexander raised good points about liquidity and also the proprietary nature of this asset class. I fully agree with Alexander. And if I add a couple points to that, I think this sector it seems to be quite exclusive because access to deals, access to private companies, and access to their data, very, very limited. Unlike public markets where research firms and investment banks are covering a lot of the listed companies and all that. So it's our job, venture capital and private equity fund managers' responsibility to run due diligence, which is actually fairly limited to traditional financial investors and retail investors. Because first of all, they don't know where to invest and what to invest and why they should invest, because information asymmetric nature is actually still That's what it is in this market, plus many other marketplaces. So it's our job to do more transactions and get more active in this space and market our companies and share information, disclosure, financial data, our investment thesis through press and also through LP relationships and collaboration with VNX-like players where they also help with liquidity and connecting other funds and all that. So there are many alternative ways to turn this asset class to mainstream. But first of all, I mean, we really have to expand the opportunity set, sharing the kind of information, what's available, and why this investment makes sense to broader audience. And we just have to be very cautious not to create additional bubble, because Bitcoin, when was introduced as kind of a speculated kind of gambling kind of marketplace, and so we have to be extra cautious about information management and make the right processes and steps to make it kind of mainstream, but it'll take time, I think.
Thank you. So, Michael, if we add on a few comments, also adding on the view of democratization of finance.
Yeah, democratization, what is it? It's allowing everybody access to the equivalent market. So just now we read a lot in the newspaper about a world where the 1% of rich people is getting richer and everybody else is getting poorer or something like that. Why is that? Well, perhaps the attractive asset classes are only available to the rich people because of the regulations, because of the rules that say you have to have $1 million before you can invest in, direct investments into illiquid companies. It's been built to protect the small investors over the history. But do people need the protection? Well, of course, the regulator wants that. But do they want to participate? I think the answer is yes. When we see listings happening of popular products, of the Facebook, of these companies, you see the regular people want to invest in the shares. And if I have a company which I use every single day, a private company, venture capital-backed company, why shouldn't I be allowed to participate as a private investor into that company through some platform? It just makes a lot of sense. Perhaps I don't even want the economic return. Perhaps I just want to support the project that I use every single day for free. And I think I have evidence behind that. There are some of the companies who are doing the crowdfunding, for example. There's one company in England, it's a bank. What's more boring than a bank? Monzo Bank in England. They raised in, I think, 26 minutes, £10 million from their own investors, from people who are using the bank account. They raised all this money. And they didn't need the money. They had the money from the venture capitalists and everything, but they wanted to do it. The market is for sure there. The mechanisms are not. And that's why we need the platforms like the VNX, like some of the other ones which are around, to encourage the world to participate in this exciting opportunity, which they can do with risk-free and with the liquidity that they need. Maybe we talk about liquidity later.
Yes, okay. Any views, Mr. Chris Hwang?
Well, the two gentlemen already actually talk about a lot of things here, but mainstream equals to regulation all the time. So it depends on the country that we go to, there's always a regulation involved. And these days, technology is actually, moving a lot more faster. And then the regulator try to, by doing the business and so on, this is not right, or etc. Such as the blockchain, like the Mr. Yoon and the Michael Jackson actually mentioned. So people buys it and it goes up, and then people sells it, it goes down. So due diligence, we're looking at the more like to tech, technology part of it, and then so make sure that these companies that has I'll skip this part for now, and I'll try to come back. Okay. So there are some comments that I want to actually make.
Okay, very good. Yeah, so Mr. Pathak.
Yeah, I think I allude to the data part earlier, so increasing amount of data. I think there's another element that is important, which is a vector for democratization of the venture capital or private equity asset class, which is automation. I think when we look at the operational aspect of a venture capital fund, there's a lot of operational procedures that are happening, which are now replaced by machines. So drawdowns, or capital calls, that are now being generated are automatically reaching investors, and even venture capital firms are fronting some of the small investors, in terms of financing, and that opens up, the opportunity for a new type of investor. So before, it's true that there was always a minimum ticket to be able to honor when making a commitment into a venture capital fund. And this actually is bit by bit, being reduced to the point where, when sometimes we ask some of the funds, what is the minimum ticket you would accept, and they would say, anything, because at the end, we send a capital call on a pro rata of your participation as an investor into the fund, and for some of the investors that are considered as minor, you can just download your report, directly on the platform, so you don't need to produce a dedicated report, for some type of investors. So all this kind of automation is allowing us, in terms of venture capital asset class, to access other type of investors. And I think this actually is going, in the direction of democratization of the, I would say, rather exclusive, asset class that was venture capital and private equity, which is becoming inclusive now.
Okay, thank you very much. If you can hand over the microphone to Michael, because I'm going to let him kick off the next one. And we're talking about opening up alternative investments. I mean, what are, in your view, the current trends and solutions?
Well, what we're seeing is big demand. We're seeing this big demand for the crowdfunding. Is this one working? We're seeing the big demand, that's better, for the crowdfunding now. We're seeing it sitting there. So this needs to be expanded to everybody. And what does that mean? That means giving people the ability to invest, see the companies, to get the visibility of the companies, and to see how the company is performing. But they need the platform. Democratization, normal people, they need access to their money as well. You're not talking about people who've got tons and tons of money, who you put $1,000, it doesn't matter. You're talking about people who, they put $1,000 in and it means a lot of money to them, and maybe something happens at home and they need the money back. They need the platform, they need the liquidity, they need to know the value of that. And this is the trend in general of how people are going to get access and how we're going to make the regulators happy about this thing. Regulators exist to protect the consumers and to protect the system. The system isn't really very bothered about venture capital. It's a rather small part of the whole macroeconomic situation, so they don't care. So they're interested in protecting the consumers, making sure I don't sell you shares in some dodgy company, which then goes bankrupt and you get cheated. That's not what we want to happen because of the asymmetry of information. Through these platforms, we get this, and the platform information is just becoming more and more available with time. I think this is it's a trend. We're seeing it happen. Some of the geographies more so than other. Very, very country specific, because obviously the regulator is in a particular country to look after the interests of the consumers in that country. Korean regulator doesn't care about American consumer. Why does he bother? So he's looking only after the Korean consumer. So we need products that he likes, and we need to educate them into this. But we're doing it steadily. The industry is moving. It's moving quickly. I think in 5 years, this will be a normal asset class. You'll be able to invest in private equity instruments with small amounts of money as a normal person, and into the companies that you love as a small company through these platforms.
Interesting. Can we have your review as well, Mr. Kwan?
I think Korea, we are seeing, crowdfunding plus a lot of micro funds, like small-scale funds, about 200 over micro funds driven by Fintech platforms and alternative platforms driven by tech. So we are definitely seeing the trend, seeing crowdfunding, small funds, and retail investors entering the alternative asset class. But again, I think investment without information actually leads to gambling. Yeah, so investors and shareholders, no matter how many shares they own, they actually have to understand what they're investing, why they're investing, and also expectation management. I mean, everyone wants to make like 10x or 20x of making venture investment, but reality is you really have to understand the hit rate and also probability and also sector growth and competitive landscape and management. And there are many components that we typically managers care a lot about, which retail and small investors tend to focus less for many reasons. So I think it's our job and press job and all of our responsibilities to bridge the gap so that investors actually are more aware of risk and insight and investment rationale, all that through this type of sessions or press and any forms of media to continue to reduce the asymmetric information nature so that the investment practice is actually getting healthier and healthier, not speculated wrong way. Even IPO market in US, legitimate marketplace can be highly bubbly and speculated, driven by some events. So market like this, Korea, smaller market, smaller scale, we have to be extra cautious, and that's probably why a lot of the regulators try to have inputs here and there. It's pros and cons. So I firmly believe in free market, but I think everything takes time. Yeah, so we just have to be patient and build up that kind of momentum to make it mature and secure and more predictable and transparent.
Okay, thank you very much. I think I'm going to hand over the microphone to Mr. Pathak, if that's okay. And add on, we see a movement in the secondary marketplaces. In fact, there's a rise. So I would like to, from your perspective, understand what are the pros and cons.
So I think if we move into a consequence, of the illiquidity, nature of the venture capital asset class is how do I get out of it, and maybe a secondary marketplace would be a way for a private equity investor to get the money back, So it's important to understand that as an investor, as an LP, when EIF invests into a venture capital fund, we are committing for 10 years plus 1 year, 1 + 1, or let's say 2 years of extension period. So it's a 12 years horizon. Now, of course, if the fund is, investing and exiting companies, in due time and with the superior return, we see some of the money coming back to us, faster than expected. But most likely, you are kind of stuck with the asset class, with your investment for a long time. It happens that as an institutional investor, with a significant kind of resources, so we do some 4 billion euro of commitment every year into some 150 funds, and we have the capacity and the structure to hold on to these funds for quite a while. But even worse, we are looking at, after, maybe 6, 7, 8 years, sometimes are getting back, the capital from some of the underlying funds that we have been investing in. And there we are actually doing a very old-fashioned manner ways, to get back money, which is going through secondary transactions. And I think this is indeed the point where we need to sit around the table and find out innovative ways of, managing secondary transaction and pushing liquidity, into this asset class. And I truly think that platforms such as VNX, would be a key enabler to kind of shape new best practices in the secondary kind of space.
Okay, thank you. $4 billion, that's a slightly bigger number than I'm used to myself. Mr. Hwang, what's your view on the pros and cons?
Well, the secondary market is growing, and let me actually give you some of the examples. It's So just NYSE actually about a decade ago started the service secondary market platform called the ACE portal. And then for the Nasdaq side, they opened the service called the SharePost. So these companies, when I see them and then working with them, previous years, special deals actually stays with the special people. So I see a lot of opportunity in the secondary market platform with the VNX, because you're bringing the potential companies and potential investors throughout the marketplace, and then more potential investor meaning to buy more liquidity. And compared to these companies out, such as the ACE and SharePost, what else? I'll come back with this. Sorry about that, because stick with the because what was the question again?
No, you actually answered it already.
Is that
most
okay?
of the question?
So I see that a lot of opportunity in this market, but it depends on how these VCs and investors and then corporates who's looking for the money and etc. And then also the regulator and the regulations and etc. I think these are the important key. But I guess the VNX actually started this service, and I see the great potential. And then some of the information and then some of the investment we have done so far, I'd like to actually share with the VNX as well.
Thank you. I think we're going to hand over the microphone to Alexander, because from your perspective, how is VNX going to address this situation, and what is your solution?
It's a very interesting question. Through a lifetime, your business model changes. What is interesting today to me is that when we were discussing our business model, and whenever as a VC investor I was discussing business models with our portfolio companies, we were angling on what would be your business 3 to 5 years from now. And in our discussion within the team, we quite quickly realized that 3 years from now, our business model will not be transactional, even though we're starting from transactional. We're connecting inventory providers with liquidity providers, basically financial investors, and those who would like to sell. In 3 years from now, our business model will be data management. For many reasons, profitability of the transactional business will be driven away. So what we will be left with is a huge database of the deals or investors or LPs, etc., etc. And this is how we need to survive. Therefore, answering your question, it evolves, but we see ourselves 3 to 5 years from now as a data management company on the secondaries.
Okay. But while you have the microphone, why don't you kick off the final and the last headline, which is about creation of liquid marketplaces for alternative investments. How will this affect the private equity and the venture capital industry?
It's a very interesting question, and here I actually have to give credit to Michael. The idea, again, I didn't create the idea of VNX. I stole it from one of our portfolio companies, or actually I matched their solution to the problem that I was facing. And it was very, very interesting. I brought them to Luxembourg, and we had a small, like an event or press conference, and Michael was also speaking there. The conference was more on the ICOs, the blockchain, etc., and the guys were as a representative of what could be built on the blockchain. But then Michael, who is a VC and who is famous for a few years saying that the VC industry needs to change because it has been there since really it took shape in the 70s, although it started much earlier, but really hasn't changed as an industry, and therefore he was speaking about the need of bringing more liquidity, more transparency, and changing the industry through blockchain. And I was sitting there at the panel, so Michael was standing just there, thinking, well, actually, the platform will be ready in a few weeks. Should I really say something? I said, no. Let's fix the platform and then do it. But I think platforms providing secondary liquidity will bring something to the VC and PE market, what the markets like NASDAQ, etc., brought to the normal markets, let's say traded markets. They will bring transparency. They will bring to some extent professionalization, because for now it's still very artisanal business. It's still a few guys who sat down together and basically doing something which they like. Sometimes with discipline, but sometimes without discipline. Transparency and bigger pool of investors who are asking you questions will really bring professionalization. And as a byproduct of it, it will increase in size dramatically. That's actually, I think, what the platforms like VNX will do to the industry.
Okay, thank you. We have like 2.5 minutes left, so I'm going to hand over the microphone to Mr. Kwan from a VC perspective.
Yeah, I think Alexander made a good point about actually they want to transition to the data side, which I'm quite thrilled about. So when we run investment practice, I care about two things. One, access to quality information. That's very, very critical to our operation. And second is analytics of the information. So what we would like to see potentially from VNX and other players is actually, in addition to liquidity, and what are the portfolio companies available for sale? And then how we can apply our portfolio to create synergy and value creation across different regions and different sectors to come up with a higher value creation angle. That's exactly what we like to do and we are specialized in. So Waze, as an example, when we decided to exit from Waze and we talked to Google, Apple, and Microsoft and Facebook and all the tier one platform providers, and surprisingly, everyone had very different perspectives on Waze, how they evaluate and how they can utilize Waze asset for their own benefit. So they all had the same information, but analytics made total difference. And the fact that Google picked it up for $1.4 billion for $20 million revenue company, they really focused on engagement. Per user base, we had about 40 minutes plus engagement time, which actually Google paid a lot of value to it because they knew exactly how to monetize and utilize the engagement traffic. So versus other platform providers actually didn't have that kind of capability. So I think we had a lot of lessons through the last 20 years building companies and selling companies and connecting the dots across different regions. And I think Europe is actually one Europe, but there are many countries and a lot of technologies and options available, which actually Korean companies have zero access to, particularly small companies. So I think the role and the opportunities that this gentleman actually are creating, I think there's a huge opportunity and value creation capacity. So really look forward to working with this type of...
Thank you. I think I have 30 seconds before Marina kicks me out here. So I'm going to hand over the microphone to Mr. Pathak, who's sitting with his $4 billion US dollar fund. And just from your perspective, how will this impact? A 30-second closing remark.
So first, it's 4 billion euro, not US dollar. But it's a little bit more.
Slightly more.
So no, I think I think the to have a platform to exit, is a good idea. I think we need to expand it also to maybe onboard investor. So I think it's sometimes easier if you have rules, for investing in and getting out. So this is a discussion that maybe we should, have, as a follow-up is maybe creating new classes of shares when investing into a venture capital, fund that allows you to have some kind of scheme of getting in and out, in a more kind of fluid way, and meet the new, I would say, requirements and expectation of retail investors.
Okay, thank you very much. And I think we are running out of time. And just to be very clear, I think we all understood, thanks to the panelists, that VNX is not actually providing a solution to an existing problem. And it will require some regulations And one thing that was not touched so much upon is actually education. Because as we also heard from Ms. Hwang, I mean, we don't want to create a bubble. We want to create a real life situation around the business in between the stakeholder who's going to do the trading. So thank you very much. And I would like to say thank you also to Marina, who created the little bit of the agenda and the back office around this panel. Thank you.